Brian Hoops, Midwest Market Solutions, on the telephone line with us. Brian, a little bit of upward movement in corn. I think the corn market is just yawning right now, but soybeans going down 4 or 5 cents. What's happened in that January-March soybean contract?
Yeah, that's a good question, Bob. Well, you know what? This is the 5th Friday in a row where we've traded higher, or at least opened higher, and then have turned lower going into the weekend. And so it may be some pre-weekend hard pressure coming into the market. I think a lot of it is concerns about South America. There is no concerns right now. We have just nearly perfect growing conditions. They started off the year very dry. That delayed plantings. They found some rain, some moisture to make the soil better for planting, and they've done that, and they've caught up their paces of corn and soybean seedings to a more of an average pace, and now there's forecasts for more rains. And so this keeps pressure on the soybeans. We're seeing all kinds of export business, huge week this week, especially for corn and soybeans. A big sale of corn to Mexico this morning. That offsets some of this really good weather, really good growing conditions in South America, and that kind of leaves us in this really choppy trading range affair. Like you said about the corn market, we're trading higher, but we're 412. We've been at 412 for seemingly 2 months now. We've traded in this range, and we find support on some weakness. We find resistance on rallies, and just can't really go anywhere. But the concerns I have going forward is a lot of these soybean purchases by China and unknown destinations that probably will end up being China or could end up being canceled down the road. If South America does grow a real big crop, China can cancel these purchases, buy South American product a lot cheaper. They'd rather buy from South America anyway. That's a concern that I have, that we're pricing in these exports. We may not have those exports down the road. The corn purchases by Mexico, I don't think they'll be canceled. They're our number one buyer of U.S. corn. They're taking a lot of the shipments by rail. They won't be canceled anytime soon. So that helps the balance sheets, somewhat in the corn market. We just don't have that same consistency in the soybeans.
Well, yeah, I think kind of summarized there. This situation probably, as far as next year's crop, isn't going to get much better. Like you say, it's looking pretty good right now, and the maybe hitting some buy stops there. The Chinese may be looking at charts and say, okay, this is about it. We might want to lay in some supply moving forward. Your spread, though, out to November soybeans, November of next year, is 10.29. I mean, are you interested in doing any marketing?
Not at that price, I guess. We recommended, to our clients at $10.50, $10.80, $11 to do marketing, and now that we're at $10.29, I guess I don't want to do any more at this point in time. If you haven't done anything, you probably need to look at doing something to kind of get caught up a little bit. But I think there'll be enough opportunities during the growing season. I think we can be comfortable if you have some sales in the books to be comforted. But I wouldn't be surprised to see us, push the contract lows the next several weeks in the soy complex. Soybean meal is trading lower for the 10th consecutive day. It's at contract lows. Broke through those August lows, and Jan beans came close to it earlier this week, rallied, and now there's that rally's fading, and I think the next stop will be below 975 at fresh contract lows. Soybean meal is looking at that weather in Argentina, and they're going to have a big soybean crop. They're going to resume exporting soybeans and soybean meal, and that's really going to hurt our soybean meal prices, and that's what we're seeing here is this $300 area giving way and dropping into 290s, and we're probably going to continue to see prices work lower into November and December in soybeans and soybean meal.
Yeah, we're looking at 294.40 December soybean meal. Let's take a look at the hog market. We are seeing a little bit of a recovery, it looks like. Lean hog futures, February, April up, 40, 50 cents now?
Yeah, we're seeing a little bit of a bounce there. As we get into this $84 mark for December hogs, it's running into some resistance. So, our rallies are probably going to start stalling out just a little bit. We've had a big run this week, some gaps on the charts, and we'll probably go try and fill those gaps. Like I said, this is a resistance point. We've seen commercials selling at this price level pretty aggressively. That's likely to cap our rallies in this hog market. So, there's a producer out there. Maybe this is a place where you look at doing something. Cattle market is struggling in here, and you have the election next week. That will be a big factor on how consumer demand is focused in 2025. So, something to keep in mind, depending on who takes control of the White House, Congress, and the Senate, we're going to have probably a lot of changes as far as consumer demand trends go in the next years to come.
Well, Brian, we're going to let you go for an hour and 10 minutes and get back and maybe get a little target out here for corn and soybeans. In the meantime, folks want to catch up with you and talk markets. How can they do that?
Yeah, you can reach us. Our website address is MidwestMarketSolutions.com, and we have a list of our offices that are around all the Midwest. You can call me directly, 417-501-5132. Make sure you follow us on Twitter as well.